Hello, hello, hello. Happy Friday, everyone. How is everyone doing? Good morning, Patrick. Good morning, Options 22. Thoughts on the cues? Well, overall, I want to lay something else. Remember, it's quarterly options expiration today, 3.4 trillion. Looks like a lot of positive gamma could be rolling off today also to free up some potential of this. There's been some selling into rallies over the last few days, especially even with the VIX very low, and that's going to roll off today. So next week could be interesting going into the Fed meeting. As always, on these massive options expiration days, I generally expect choppier days. They mostly favor choppier days. It's in like the 80% range. So unless we get some key momentum either way with follow through tick, either positive or negative. I'm preparing for some more back and forth range bound days unless something happens. Now, the only thing that can really change stuff right now is we got industrial production minor number out at 8:15. Sorry, the dogs are going nuts. There's more stuff happening at the house. Uh, Consumer sentiment at 9 a.m., 30 minutes after the cash open. These are the preliminary numbers, but a lot of people will be watching them, especially the inflation expectations going into next week. But, the word on the street is next week's going to be a hawkish pause. I don't know what a hawkish pause means exactly because it's just a pause. Does that mean they're going to say we could resume? Or data. I mean, it's all just a bunch of crap. But pretty much, everything's priced in for the pause next week. Today is the 3.4 trillion OPEX. It's not just a monthly; it's quarterly OPEX. What used to be called quad witching, because you have a lot of different options expiring today. So, Apple. Apple's interesting, by the way. It's got that bigger potential little mini, well, the bigger double bottom pattern in, but we're nowhere near triggering. There's also a potential percent B buy if it closes above to yesterday's high. It's already trading, or was it yesterday? I'll have to double check. Oracle, Adobe did a beat, but down 3.56. Also, Adobe's still one of these overvalued, trading close to 50 times PE. Semiconductors, the equipment and materials are taking it in the shorts a bit this morning. Apple's sort of holding stuff out. Amazon pulling back, Google pulling back. Wonder if Tesla's going to rally because of the auto strike. Because well, Tesla's going to benefit. Tesla, from that technical point of view, is watching for that 87.5 level now. Where'd Tesla go on here? I can't even see it right now. Where'd Tesla go? Oh, there it is. I'm sitting right next to it. Oh boy, there it is, up 87 basis points. So far, basic material healthcare. So it's a sort of a risk off day today with the rotation of basic materials in healthcare and industrials. And so far, heading into the open rotation out of comm services and technology besides Apple. Again, we're at 97% that there's a pause next week. Even I don't know how it's even looked at the hawkish pause because we don't have any hikes even above 50% priced in for the rest of the year. So we'll have to see if that changes with the press conference. As of yesterday's close, still right on the verge of neutral to greed again. So that's where we sit there. Earnings, nothing today. Adobe was the last major thing I was keeping an eye on. Good morning, Tony. Good morning, Sterling. What's driving CL crude? What's driving crude down? Well, crude's getting overbought and it's really pausing. It's against some very key technicals. We'll take a look at that. Uh, Big dog bark. Yep. Disney bottom forming. I don't know if we'll have a chance to look at that, but remind me if there we go. Well, there we go. All right. Watch it. We got the little mini double within the bigger double form yesterday. It's potentially one of these little channeling doubles. So I'm watching even for a pullback. But as I said, I'm prepared for more of a back and forth day. You had a really sloppy mini head and shoulders, like a really ugly thing forming into the open. But where's the bigger? levels. The bigger support level is about 45.42 to about 45.39. So that's where I'll be watching heading into the open. If it continues the pullback, the resistance area is really back up about 45.63 area. You see the key breakdown. Let me put that on the chart, this line right here. The key major candle body breakdown area, which was retested overnight and has been so far resistance. So keep an eye on also the core support area coming in here, and do not be surprised if it's choppier back and forth, especially with so far an up week. So remember, Friday's last close was 45.1125. I mean, unless you have disaster mode, right now we're trading what, 45.48. So unless this thing pretty much drops 37 points, you're looking still for an up week. With daily cycles still heading up, weekly cycles still heading up, and freeing up some positive gamma going into next week. NASDAQ, again, the key resistance area you see here, let me remove this silly triangle breakout right here, but key resistance area, you can see it right here. Yes, yesterday's high, so far today's high, and the major support level isn't till a fair amount lower, but going into the open, there's two key levels I'm watching, right around 15,580, and then where we're getting close to trading now, right around 15,620. So that's the area I'll be watching for some pretty key support going into the open. On any bounces, there isn't a lot of resistance, so to the upside with this little mini clear path, but I'll be looking at about 15,680, and then 15,711 is major resistance, and anything, if it does manage to get it back above there, goes into a huge resistance area. Again, I'm not counting on a lot for today because of the major OPEX. Dow, little reversal going in the open. I'm still keying off of right about 35,150 on a bigger pullback. The minor that's really about the pullback area. Minor pullback area is about 35,185 to 35,2. Resistance is back at 35,350. This is a day I like to view today, especially with where we're sitting in the technicals. Just don't throw money at the market. Little reversal back in the Russell. Key support in the Russell is about 1874 again. The VIX, look at I mean, little bounce up today now, but so far, I mean, this is the lowest low since when? Oh boy, we set a new low since, holy smokes. I'll have to go back, but it's been a long time with today's low and a little bounce up off over that, but it's still, I wouldn't be surprised with a little buy back in some volatility from the people who've been short in volatility and the funds that have been short in volatility. So we could, again, see that choppy back and forth pressure. That's where today's panning out unless consumer sentiment really does something interesting. DAX popping up actually above the key level of support, right, or key level of resistance right here. But establishing a new little upper boundary, but all told, since the beginning of August, has not made a lot of downside or upside progress. It's been caught in a lower bound. So unless it really starts breaking above, let me update these, it shifted. Unless it starts really getting above 16,200, not real interested in at least even looking at it from a more substantial bullish side. The notes, or 10-year notes, are rolling over again into a very key support zone, and the yield is climbing. There is, this is not really a properly formed double top because of all this sideways action, but the only breakdown thing would be back above below 402. It's interesting to see because we're still getting some upwards pressure on the 10-year. It has not been able to really substantially sell off. and is chipping away at this 4.32 boundary to the upside. If that breaks out, it could get interesting for the market's dollar index. Slight little pause here, but really not giving any buoyancy to the overall broad market yet. The key support now, the key support in the Dow is coming. I mean, it's one of those mornings. I did not sleep much last night. 104.70. Crude, we hit the major. This is what I'm talking about. From the highs back in March of 22 to the lows in May of this year, we now hit the 50% harmonic and a minor harmonic cluster. So we've also got to overbought zone. We've got the overbought zone. We're getting back in this topping area on the weekly after a pretty big tear. Look at this. Look at the last 3 weeks on crude. Since the close back at August 21st, the week of August 21st at just below 80, we've now hit 90. So roughly $10 in 3 weeks. So you're asking why there's a pause? It's just from purely technical. This thing's been on a tear. On a tear, it has also now hit daily overbought. Anything, even back to the daily rotation zone, even pulling back to 87 area wouldn't damage it technically at all. So this is just a pause. So if you've been playing it from the long side, I just want to know, you should know where your trailing stop is. But this is a pretty key level. It might take a couple tries to really break through that, because the 50% levels, as you've seen on this channel, are very, very strong. And besides it being the 50% level, you were in the top from last October 22, the top in November 22. It broke above that last August and then sold off. So look at all the selling pressure that's come in. This area is very key. So again, for the bulls in crude, it might take a couple tries. If it's going to break through this level, it might take a couple of tests of that key level. Would not be shocked to see that. AR is a low PE ratio and a triggered monthly, weekly double top that has not hit the first target, is trying to break out of a weekly downtrend line. Thoughts? Let's see if we have some time to get to that. Natty gas, still having trouble with this 281 level. That's still what I'm keeping an eye on for the breakout. Gold, with a follow through today. Now, this had to be played on an earlier break because this was setting up a percent B buy. But if it does close above today's high, which I'd be shocked if it didn't, would be an aggressive percent B buy, and the first target would be 1954. But it would have had to already been played on the break from my perspective. 10 years. Still hovering up here, forming another sideways channel. Yen trying to break above this most recent little resistance shelf, and then still the targets, the 87.5, 148.85, but not much to talk about there. Euro, again, with this dollar pause, would not be surprised to see some kind of bounce, but now your resistance area is back at 106.90. So we just keep edging lower. Pound broke through the 200, coming into some key support. So even with the pound, any moves back to rotation zone is key. Rollover sell. Bitcoin again popping the last couple days, but still in the consolidation. You know, we came back down to key support area, got the little pop. Not going to comment anymore on that. I'll be watching for the rollover. The spiders. The spiders closing at the minor harmonic yesterday. Right now, on any rollover play, the key areas 447.71, and then if it keeps downward pressure, 446.51. Those are my key areas of support. I'd actually say 446.51, 447, and then 447.71 are the key levels I'd be utilizing to that. to the upside, we're trading 448.01 right now, 448.55, 449.07, and then the close 450.36. But again, expecting choppier price action. The Qs, they're trading 376.12 right now. 376 is very key support. We break below that. I give it to 375.82. Below that, there is not a lot of support until about below 375. So the next key support would be slightly below 375. Other than that, on any rally, we're looking at this 377.27. Let me go to shorter term charts to about 378.25. And then above that, 378.50, and then 379.60. Again, I would not be counting on a lot of momentum without the market proving itself first. So that's where you got to be careful throwing money at this market, unless you're playing like I'm going to sell some options into expiry and, with key options at support or resistance levels. Tesla, again, if it's going to keep going, 288.42 is the 87.5 level. That is the next key level. You still have this little mini double in play, but it could be taken out this morning, and that's nowhere near triggering. The trigger point for that is 266.60. What else? Oh, Apple. So yesterday set up a potential with cycle bottoms against some very major support areas, set up a potential percent B buy, but it would have to close above 176.10. We're trading 177 right now, and that would just be a front run pattern into the rotation zone. And then if you're looking to roll something higher, this is where I do watch front run patterns, because if Apple did get some traction and closed above 180.30, we still have a gap left behind and a little mini double bottom pattern. So that's why I'm paying a close attention to where this runs today, and if it holds above yesterday's high. What else do we have? Thanks, Tony. Hey, happy Friday, Chris. Your thoughts on parabolic SAR? I've never used it as a stop and reverse. Parabolics can be used as a trailing stop from my perspective. Okay? But the general way to do it is don't use the default. Tie it in to shorter term volatility patterns. So don't use the 14 period SAR. Parabolics. Don't use the default 14 if you want my advice on that, if you're going to research it. What else do we have? AR. What am I missing here? AR has a low P and a triggered monthly weekly double top. Triggered monthly weekly. Oh, this one back here. That's what you were talking about. What are my thoughts? Well, it's oil and gas production, so it's trading overall. In the short term, remember, this is a monthly pattern. This is a monthly pattern. So, remember, monthly patterns can take a there it is on the weekly, there it is on the, let's just call it a weekly pattern. It's better formed here. The stop level is still way up here. All right, even if you said I'm trailing early, the stop level is still around 38, or the invalidation level, we will call it. So, what are the thoughts? Personally, you know what, this thing could run higher if it does break above this, if it does break above 30, but right now this wouldn't be overall concerning in the bigger scheme of things. Okay? It's not got a, it's had a run with oil, but it's, again, oil's kept running, and I'd have to do a little more research. I don't know the exact ins and outs of this company, where their exploration is. It's been missing a fair amount of earnings still. So I wouldn't be chasing this thing higher. I'd be watching, if you're not already short, I'd be watching for pops and then potentially short plays, because look, oil's been really running, and all this has been able to do is, since the last earnings report, it popped. You got a little pop, and then it's been back into consolidation. So this would not be something I'd want to chase higher. All right. What else do I need to talk about? I don't need to talk about much. What would SVXY has done? Yeah, this pro short. Yeah, because these are going to get massive squeezed. And when this thing reverses, you're going to see a pretty big bloodbath when the VIX finally reverses. Would I be playing this crazy long to the upside in September? No. I'd be very cautious now. But it's the inverse to the VIX. So the VIX, look at this. September, did I say August? September is, this is potentially the worst month of the year. Doesn't mean every year it has to be that way. But this is where, with VIX at records lows, I would not. I like to personally hedge portfolios at this time of year, because you can get downside risk out of nowhere. I would not be chasing that a lot higher at this point. I think now that does not mean I'd go in the opposite and buy one of these inverse VIX things that could pop if we get a VIX pop, because that can bleed out. But that's getting way overdone. U.S. dollar, Japanese yen, 15-minute double top. Okay. We can go down to the 15-minute time frame. Yes, it is a valid double top. Keep in mind, it's going against all your rotation zones and against very key support. So let's just see if that was going to play out. I'd be possibly using it as a pullback level, but if that was going to play out, where would it take us? Wouldn't even it'd take us back to the 4-hour rotation zone and even above the major base at 147.46. So that's where that sits. You're welcome. Don't has 14. We'll take a look at that more. I got to get running into the open. We can take a look at that more next week, Henry. I'm talking about the period it's looking at. We'll take a look at that more next week. With that, I hope everyone has a great options expiration, and I will be back on Monday. Bye for now.